Good evening to one and all present here. In today's event, we have with us our product manager, Jason D'Souza. We'll discuss the new SEBI report on F&O segment. You'll also discuss the factors that cause investors to lose money, and we'll also discuss the pointers you need to consider while dealing with F&O. You can ask your queries in the Q&A session towards the end. Over to you, Jason.
A very good evening to one and all present here, and welcome to today's event. I'm back, I think, after more than a week. And today's topic is once again slightly different. I think not slightly, quite a lot of different from what we've covered. We started off with fundamental stocks. Today we're on the F&O segment. In today's event, I'll be actually looking at the SEBI report which has recently been released. And what are the key highlights of that particular report? So let's start off. I'll give you all a disclaimer that investment in securities is subject to market risk. Past performance should not be construed as a guarantee for future returns. And remember, investment in derivative contracts like future and options carries a lot of risk. So until you don't actually understand that particular instrument, it's safe to be far rather than to be sorry about it. So starting off. So what will we cover in today's event? First, I'll give you all a brief on F&O instruments. Now, some of the investors who have joined us today might actually know what are future and options. And you all might not require the first part of this presentation. But to the investors who are kind of new today, I'll give you all a small brief on what exactly future and options are. Now, it's not going to be a masterclass session. You all might not actually understand it. But I'll try my level best so that you all can understand the rest of the presentation as well. Then we'll talk about something like the business development in the F&O segment. I don't know if many of you all know how fast or how rapidly this particular space has grown. So I'll be throwing some light on that as well. Who invests in the F&O segment and what kind of contracts are involved? We'll be also touching upon this. Who is losing versus making money? And I think this is the highlight of the entire report which I found out. It's quite shocking. Some of the numbers we're going to look at today is quite shocking as to who is losing versus who is making money. So we also focus on that particular point. And lastly, 3 reasons why investors fail to crack the F&O space. Not just 3 reasons, there are many reasons. I can go on and on. But I'm going to give you all 3 particular reasons why investors fail to crack the F&O space. Now you all might be a bit upset that Jason is coming. Why isn't he giving a strategy? Why aren't there 3 strategies to crack the F&O space? Don't worry, if you all understand the 3 reasons why investors fail, you all will be a bit more informed tomorrow. So if you all ever enter the F&O space, you all will actually have some idea of why investors fail. Okay, so starting off, I'll give you a small brief on what exactly are future and options. Okay, so for the new investors over there, let's look at what are future contracts. Now let's remove the word future from here. Let's just simply look at what are contracts. When you open your mobile app and you go to buy a particular stock at a particular price. Okay, so let's say you're interested in buying this particular stock, let's say ITC, at 380. You will have to find a seller who is also ready to sell his share at 380. And that's when that mutual agreement then the particular handshake takes place, that particular mutual agreement. Okay, I'll sell and you buy at that one particular price. Now, when you add that word future into this particular contract, future into this particular transaction, you'll make a particular agreement at a predetermined price and you're going to do that contract on a future date. So nothing very complex. You're doing a contract similar to how you'll buy and sell shares in the market with a lot of investors. But you're doing it today at a predetermined price for the future. Okay, so let's dive a bit deep in. I've put this particular emoji and I'll be using this particular emoji in the next 2 slides so you'll get a better understanding. When I long a future contract or I'm buying it, I'm bullish. I expect that particular instrument or that particular contract to actually move up with its price. Whereas when I'm shorting it, I'm bearish. I expect that particular instrument to actually fall with its price and valuation. Okay, so future contract is very simple. It's very similar to how you trade with shares. The only thing that it's happening at a future date. Okay, so let's take an example, the best way to learn anything. Suppose Amit is bullish on Nifty at its present level of 17,850. The Nifty is currently trading at that particular range. Amit is bullish. He expects Nifty to go up very well over the next few, let's say, months. Okay, so what Amit can do with a futures contract, he can long futures, or he can buy that particular future contract. Now, if you see in bold, I've written here lot size. 50 shares, 1 lot. Now, what exactly is this lot size? When it comes to future or even options, you can't just long one particular share or one particular unit of that particular derivative. That's where we introduce the thing called lot size. is you have to actually buy a particular lot or multiples of that lot. So most of you all might know Nifty has a lot size of 75, which is revised down to 50 now. So whenever you want to actually long a particular Nifty, long the Nifty index, you'll have to lot 50 shares of it. Now here the problem might come in, ki 17,850 Nifty. That's the level, and you're asking to buy 50 shares. That's like 50 into 17,850, an investment of around 9 lakhs. You know, many retail investors will step back, saying, "Itna bada investment, who's going to do such a big investment? 17,850 and 50 shares. It sounds very big." Okay. So in futures, what happens is that you only have to pay a margin of that particular contract. Let's say 10%, 11%, so on and so forth. So let's say 17,850 into 50 shares, 9 lakh rupees. Instead of that, you only pay an upfront margin. Let's say 10 or 11%, 90,000 or 1 lakh. And that's a big catch in this particular F&O space. You're only paying for some amount of proportion and you're enjoying the entire value of 9 lakhs. So here your profits are actually maximized or your losses are also maximized over here. So that's the entire ideology of why we have lots in derivatives. Okay. Let's say after 1 month, I was bullish at 17,850. After 1 month, Nifty level was around 17,950. And this particular future contract, we done it a month ago and we were agreeing to exchange the contract after a month. Now after a month, 17,950, I am making a profit straight of 100. 100 into that lot size, which was 50. So a straight profit of 5,000. Very basic, simple calculation. After a month, it's also possible that the Nifty level from 17,850 goes to 17,750. So here you're making a straight loss of 100 into that lot size of, let's say, 5,000. Now this is a very simple example. Okay, I'm talking about a very simple scenario. If you go and actually trade, it's not that easy. There are a lot of factors to consider, a lot of exchanges to look at, so on and so forth. But this is a very basic example. You're either bullish, you long a future contract, you're bearish, you short it. You're expecting the price to reach a particular level. Remember the lot size. Okay, and remember that this is all about a margin. I'm not paying the entire price of the contract. Okay, I have to only deposit a margin, let's say 10%. Sometimes, the index might ask you to, the exchange might ask you to deposit 50% of the margin, so on and so forth. We hear a lot of this news about margin. And here if you just put some 10-11% if you're going to do a Nifty future. Okay, so futures contract is quite simple. It's very similar to shares. The only thing is the word future, because you are agreeing today to do that handshake, but at a future date. Okay. If this was quite simple, options might be slightly difficult for you all to understand, especially if you're hearing this particular word for the first time. Okay. With options, we have call options and we have put options. Now, let's not get into why do we have two different options. Okay. We have call options and then we have put options. When you long a call option, as I've put the picture of a green bull, you're actually bullish on that particular asset. Whereas when you short a call option, you're bearish. This is quite simple now. This is as simple as it can get. It's very similar to a futures contract. Whenever you long, you're bullish, you're short, you're bearish. But when we talk about put options, here you see the emojis are exchanged. It's a bit of a reverse. When I long a put option, I'm bearish on that particular instrument. Whereas when I short a put option, I'm bullish on that particular instrument. Now some of the investor might ask, if you're bearish or bullish, you could actually satisfy all your requirements with the call option. Here you have both the sides. You can go long or you can short a call. Why have we actually introduced a put option over here? And that's the reason why I'm going to take you to this next thing is that when you long a particular option, let's say long a call option or long a put option, you have a right to actually exercise that contract. But when you short that particular option, you have an obligation. By right, I mean that it's your wish. If you enter as a long party in any of these options, it's your wish whether you want to actually exercise that contract at the end of the expiry. Whereas when you short, it's an obligation. Okay, so you can see the long parties over here have a right and they have an upper hand. They have slightly, I would call it a premium place when it comes versus the short party. The short party has an obligation to fulfill that contract. Okay, let's say I am bullish and I bought a particular call option and I expected the price to go really high and it does not go, it actually goes down. Okay, since I've longed that call option, I have the right, niche gaya na, I don't want to exercise it. But if you're short, you have to do it either way. Okay. The loss potential over here is something very different. When you long a particular option, your loss potential is limited. Whereas when you short, your loss potential is unlimited. Okay, we'll not dive into deep as to how it can be unlimited, but I would like to tell you that ऐसा business है where you put 100 rupees, you might be losing 150. So you're losing more than the amount of capital you can put when you write a particular call or put option. Now we talk about many smart investors who say option selling, option writing. They mean this particular thing where your loss can also be unlimited. Okay, so you got to be aware of these particular terminologies. Let's dive into a particular example, very similar example to the futures contract. Now Amit is bullish on the Nifty at the present level of 17,850. Let's say he's bullish. Amit longs call options, or Amit buys that particular call option since he's bullish. Again, 50 shares of one lot. Now, as I showed you in call option, there's a long and a short party. The long one has the right. The short one has an obligation. Why is it so that the long guy has a particular upper hand to it? Since he has an upper hand to it, he has to pay a premium to the short party. You see, he's favored over here. He's got a right, so he has to pay a particular premium to stay on that particular right. That's where the premium concept gets introduced when you come to a longer call or longer put option. Otherwise, it will be really simple, right? I buy a particular contract, I can wish whether I want to exercise it tomorrow or day after. But if you have that particular upper hand or you long the option, you have a right over here, you have to pay a particular premium. Now it's at 17,850. Let's say after 1 month, Nifty's level is at 17,950. You're again making a profit of 100. Okay, so 100 into the 50 shares you bought, you're making some 5,000 profit minus the premium you'll pay. That's your break-even point. You will exercise that contract, whereas if your premium is less than the amount of profit you're making. So that's the premium quotient. Since you're longing the call option, you have the right, so you have to pay some premium also. Okay, so even if you make a profit, you will deduct your premium from that particular thing. That premium to actually have the right to long that call option. If you see in the previous example, it was just straightforward 5,000. Here you're paying a premium. Now if you see after 1 month, on the right side, if Nifty levels falls down to 17,750, whereas you are at 17,850, now you're making 100% loss over here. I mean 100 points loss. So 100 into 50, you're at a loss of 5,000. Okay, now you're at a loss of 5,000. Since you have the right, you can step back. Since you have the right, you've longed the call contract, you can step back and cancel, you don't make that particular loss. You only lose on the premium you've paid, which is the premium over here. That's why, remember the previous slide I told you about the loss potential. When you long an option, your loss potential is limited to that premium. Whereas when you write, your loss potential is unlimited. Okay, so it's a very simple example. And if many of the investors here found it a bit fast, couldn't understand it, don't worry. We have many YouTubers, a lot of people who have explained it very well online. You can always look at that and then come back to this particular presentation to understand the rest of it. But I've tried to go very simple so that you can actually get a clear understanding of what it means. But understand one thing which separates out futures, which is straightforward, to options is the premium the particular party gets. He has a premium and upper hand, which actually determines the price of the option contract. Okay, I don't want to dive deep into this. I don't want to dive deep into volatility, the geeks and all of that. I'm just trying to make it very simple for you so that you get a small understanding of what's happening. Now, moving on. When we look at future and option contracts, we have index future and options and stock future and options. Okay, this is really important to understand the rest of the presentation. In index, you have Nifty, Bank Nifty, okay, Nifty Fin, and they have weekly and monthly expiry. Whereas in stocks, let's say I've written ITC FEB futures or Ambuja Cement FEB 300 rupees call. That has a monthly expiry. So the one thing that differentiates these index and stock options are the weekly and monthly expiry versus just having a monthly expiry. Okay, so this is one of the point. Now let's dive into the report. If you all have got a basic understanding of what are these derivative contracts, let's dive into the report now. There was a report by SEBI. So SEBI plans to impose some additional safeguards for retail investors dealing in the F&O segment. And if you look at the study, they have tried to analyze trading by individual investors about the net profit and net loss for the period of financial year 19 and financial year 2022 only. Okay, these two different periods. Now you will ask me, why has SEBI taken these two different periods? The reason is very simple. Pre-COVID and post-COVID. We talked about COVID happening to India, a lot of growth in the entire broking space, a lot of investors entering. So here we are trying to understand what was the change which happened in the F&O segment pre-COVID and post-COVID. Okay, so it was trying to understand the trend before and after the COVID-19 outbreak. Now, how did they do the study? Did they go and collect all the data of all option traders or all future traders? No. They looked at the top 10 brokers in the equity F&O segment. Okay, these nearly account for 50% and 67% of the individual client turnover. Okay, so it's like a sample. It's not the full data. It's like a sample of the top 10 brokers. Okay, so this is not 100% of the data. This is the exact report by SEBI. Now let's dive into this particular thing. Let's understand the user base now. We're looking at top 10 brokers. Let's understand who are these traders. If you look at all traders, 100%, we had some 45.2 lakh traders in financial year 2022 and 7 lakh only in financial year 19. You can look at the growth. Okay, the massive growth in people entering this particular F&O space. I remember back then in 2018 or 17, when I used to particularly place trades or invest in stocks, I never actually dived deep into future options. And whenever I used to click on that, a lot of people or my people around me used to tell me, "Yaar, wo bahut risky hai, ruk jao." Okay, understand the amount of risk it has. So I was a bit scared as well. But post-COVID, we've seen a lot of bank nifty videos on YouTube, Telegram groups, so on and so forth. A lot of investors started entering into this particular segment and this particular space. Now, after all traders, if you look at active traders only, so how did they define active traders? If any particular person has traded more than 5 times in a year, then we call them active traders. So here you can see the number dropping from 45.2 lakhs. We had 39.7 lakh active traders. That's still a big proportion. Okay, active traders more than 5 trades in a year. Whereas less than 5 trades, we call them as inactive traders, so they come into all traders. Lastly, we have this active trimmed user base. So how do they trim this particular user base? What they do is that they get all the investors in one particular line in the profit and loss they make. They remove the top 5% and the bottom 5%. So the top 5%, there might be one particular investor at the top who's made some, let's say, 1,000 crore profit from options and trading. So they remove all those top people and the bottom people. They look at the chunk, the middle chunk of the base over here. And that's the active trimmed base. Now, why am I actually trying to make this complicated? I'm talking about all traders, active trim database, because I'll be using these terms in the next few slides whenever I come to any study points. So as soon as I say active trader, you all should know, okay, he's talking about that person who's done more than 5 times a trade. Active trim database, then you should remember these 3 particular people. Okay, that's why I'm trying to actually break down these 3 particular user bases over here. Now moving on to the next particular point over here, let's look at the overall product-wise breakdown. Okay, I spoke about index futures, index options, stock futures, stock options. If you look at the total clients, index options, this Nifty, Bank Nifty, 60% of clients are engaged in index option trading. 60%, a very huge proportion. Around 30% in stock options and 5% in index and stock futures. Now, this has a very big chunk. If you see stock options, index option, a very big chunk. And if you see the amount of margin you have to pay is also less when it comes to options. Now with less amount of money, more people are actually excited to enter that space. Margin kam dena bad raha hai. So with less amount of money, I can actually enter in these contracts. So people are actually entering more into index and stock options. This is more shocking. Now I've added the percentage of loss-making investors in this particular group. 74% of people have made loss from the index future. 89% in index options. Like 9 out of 10 people. 67% have made losses in stock futures and 82% in stock options. These numbers are quite disturbing. Jason spoke about index options, stock options. Options mein right milta hai. Either loss is limited. Why are people still making loss? If option contracts sound so easy on paper, or it sounds that the loss is limited, why are people still making loss in that particular contract? This is the question. And I'll try to explain it in the slides later, especially the last 3 slides. Moving on, let's look at the growth and adaptation in the F&O business. Remember the numbers I showed you? In the last 3 years, the number of individual traders in index options and stock options increased by roughly 8 and 5 times respectively. Big growth. I'm not really sure whether it was COVID and people are sitting free at home and they downloaded this app and entered different groups and started doing this, but an 8x growth, a very rapid growth over the past 3 years. And I dived a bit deeper and I looked at NSE's mode of trading. Around 14% happens from mobile phones. From your simple smartphones, people are actually using options. Trading in derivatives from smartphones itself. I don't know if many of you know, option and futures is a very sophisticated or very, you require an expert screen to actually enter into that particular space. I visited many traders before this event and I looked at their setup. They have screens over screens. Some of them are trading the US market, some of them are trading the Nifty index, some of them are looking at, S&P's open. And they're looking at a lot of indexes, but 14% are still doing from mobile phones directly. Now, I didn't have data whether who is actually making profit and losses. But still, we have 14% of confident investors from mobile phones. I think it was the top proportion of which device are people using in trading. Okay, so there's been a huge growth and a very good adaptation in this particular F&O business as well. Moving on, let's look at the age group wise. Which age group is actually investing? And SEBI did a really good job over here. They kind of broke it down. So the 30 to 40 year age group has the highest participation in the F&O category. But there has also been a massive increase in young people, 20 to 30 years old, from 11% to 36%. So if you see over here, this blue is actually pre-COVID, this purple is post-COVID. If you see, there's been a huge growth in the younger age group. But right now, 30 to 40 year age group is actually dominating when it comes to the F&O space. That's great. Let's look at who's making profit and losses. And this data point shocked me. I spoke to a lot of people in the office, I spoke to a lot of people outside the office. And I asked them, how can you actually get successful in option and future trading? And they told me, by experience lagta hai. You need to spend a lot of time over the next few years. After spending a lot of years into futures and options, you actually make profit. In the start, you'll always make losses. This data point shocked me. Because if you see, I've divided the age groups over here. Okay, all the age groups, average PNL is making loss, but the less than 20-year-old, the new age kids are actually making the least loss. If you look at the average profit made, less than 20-year-olds are making the most profit. The average profit over here, 4,91,000. And you look at the average loss, still, these guys are second with minus 65,000. And the older counterparts, people spoke about having experience, but still they are making the highest amount of loss. So the youngest age group was actually doing really well when it comes to making profits and limiting their losses. I don't have a reason for this. I'm still hunting that particular reason. I really don't have a reason for this. I don't know if their strategy is good, if they set good stop loss limits, if their risk taking appetite is lower, so they are limiting their amount of capital. I really don't have an idea for that. But this was a break news for me when I looked at this particular report. I thought the numbers would be the opposite, but it's actually the way around. Okay, so here we can get a clear insight that the younger age group is actually better when it comes to making profits, whereas the older age groups have a higher loss. Okay. Moving on to the next particular insight over here, let's look at the client participation in the F&O space. So the number of individual traders, as I said, have grown by 8 and 5 times. Okay. If you look at here, there's index futures, index options, stock futures, and stock options. This particular index option saw the biggest growth. FY19, 39%, now it's 61% of traders over here in this particular index options. So it's a similar data point, index options, the Nifty, Bank Nifty, we are finding most of our investors stuck in that particular segment. Okay, moving on to this next slide, who is losing money? Let's break it down now. We got some idea of what is F&O options and what are these particular contracts. What's the base looking like, active traders? What's the age group breakdown looking like? Let's look at who is losing money right now. 9 out of 10 traders have lost money in this particular study done by SEBI. 9 out of 10 traders, worse than a flip of a coin. If you actually go and buy a particular share, your probability is still 50-50. It might go up, it might go down. It's 9 out of 10. So 9 out of 10 individual investors actually made losses in the equity F&O segment. The average loss was 1.1 lakh and it's a huge sum. I mean, if I had 1.1 lakh, I would still invest I would make a good portfolio of around 9 to 10 stocks, but 1.1 lakh was the average loss by all traders, okay, the entire base. But what was shocking is that, okay, now I'm looking at the active trimmed base, the third percent, remember? During FY 2022, the average loss of a loss maker was 15 times more than the average profit of a profit maker. Okay, you're getting this, 15 times higher is the loss made by individuals versus the profit made. So if you meet two people in this particular room, you might ask him, oh, you made profit? His profit amount would be really small. And if you meet the guy who's made loss, his loss amount would be 15 times higher. That was a really disturbing point over here. I thought they'd split well, yeah. Someone's making 100 rupees, another guy's making 100 rupees. But when someone's just making 100 rupees, the other guy is losing on 1,500 rupees. That was a very disturbing data point as well. 15 times higher is the loss. Okay, and within this 9 out of 10 investors who are losing money, okay, so I said ki 1.1 lakh was the average loss. And when you look at active traders, the people who are trading more than 5 times, I thought, you know what, if you're actively trading, the loss should be lesser, but the loss was higher. These guys are actively trading, making more than 5 trades to actively make more loss in the market. I thought, you know what, these guys who make loss, they must have done 3-4 trades in a year and said, ki, you know, let's leave this business, is not good for me. But the ones who are still active, doing many more trades than 5 trades, are still making more losses. And you know, some of these data points don't actually make sense to me, because I thought if you're being active in the market, then you would limit your losses. Here, if you're trading more, your loss average is actually increasing. It's become slightly easier to make losses. Now, what I've seen is that because of these new companies, the transaction costs have decreased. If you look at the costs prior to COVID of actually, you know, trading into the derivatives and options segment, there's been a huge base of investors coming in. So many of the broking spaces have actually made their prices a bit competitive. It's become easier to make loss. Transaction cost as a proportion of net trading profit fell across all products. So it gives you a slight idea that the amount of cost you're doing in making this particular trades has become very competitive. So it's become slightly easier to make losses. Now we spoke about who is making losses. Let's look at who is making money in this space. Okay, so 11% traders make profit, very simple. 89% made loss. So 11% made traders made a profit. Okay, and 6% of active traders. Still, I was a bit confused. I thought if you're actively trading, you should actually make more profit, but the number dropped from 11 to 6%. Another shocking data point. Top 5% is equal to 75% of the profit. What I mean by that? The top 5 active profit makers contributed to approximately 75% of the total net profit. The top 5 guys, the smart ones, are making profit, but the amount of profit they made is 75% of all the profit makers. That's another disturbing data point. It's like, you know, there's one particular premium group who is so good at trading. The top 5% of that group is made 75% of the profit. So you see, the profit is kind of skewed to some set of investors. It's not like all retail traders are making even profit. There might be some smart groups who actually run the market, some of the good operators who are making much more profit, that is 75%. Now, I spoke about transaction costs over here. I realized that, okay, there's some few more data points. Transaction fee accounted for around 28% of the net trading losses for the active trader group. The fee itself was 28% of the net trading loss. So huge amount actually went, you know, trading in, trading out, paying your brokerage, paying your margin, so on and so forth. There's another distinct point that male profiteers spent more than the female profiteers in actually trading. And the youngest group of profit makers spent the least amount of transaction cost as a proportion of net trading profit. Lower volume of trades. I really don't know. Yeah. The youngest, when I went and spoke to people, they said you need experience. But I can see the young population over here actually making more smart trades, fewer trades, more profit and less amount of losses. I can't actually come to conclusions over here, but I can say about few learnings about this particular presentation I made. Now the F&O space has seen rapid growth with all age group of investors. Index options, as I said, Nifty, Bank Nifty are the most traded instruments according to 61% of the trades. And you know that from that 61%, 89% people are making losses. Okay, loss-making investors are extremely high, with the magnitude of loss being greater for active investors. The more actively people are trading, the loss they're making is slightly higher. And profits are skewed, limited to only 5% of the clients. The profit made is quite tiny in comparison to the losses incurred by investors. Okay, these are some of the learnings when it comes to the F&O space. I can see a lot of excited traders entering the space without actually understanding the segment and making huge amount of losses. And the profits made are by this certain group of investors who are doing it very well. There's no particular, relation about experience as well. Why are the younger age groups actually making more profit? I don't have an answer for that as well. These were some of the learnings from the SEBI report. Now, I want to show you some of the mistakes that traders make, which if you all enter in this space, you all can kind of avoid. These might be very basic mistakes, but it's better I throw some light on them. First is the margin gain. Don't bite off more than you can chew. Very simple as that. This is the only one of the businesses where you can make more loss than what you're actually putting in. which is because of the margin. It gets quite addicting. You can't actually afford that particular instrument. So you're paying only 10% of the margin, saying, oh, I'm paying less, right? So I can make more profit. Remember, you can make more losses as well. Now, when contracts are available in lots, the profit and loss both are equally maximized. And when you talk about hedging your portfolio, I'll not go deep into that concept. But you know what exactly is hedging? Let's say you have 100 shares of a particular stock in your portfolio. Let's say 100 shares of TCS. And you're expecting that particular stock to fall down. You want to hold it for the long term, but due to the short term, let's say IT industry not doing well, you're worried that it might fall low. It might go a bit low. So that's when you can actually hedge. You have the 100 shares of TCS, you can long a put option or write a call option. So that even if it falls down, you're still making some profit. If it goes up, you're still just losing out on some premium. But many of us don't actually understand this hedging concept. If you know, these option contracts are available in lots. I have some 5 shares and I'll start, option trading, hedging my portfolio. But you have only 5 shares, sir. You're getting it? So you have to actually understand this margin game, the size of the different lots, and then actually enter into this contract. Option trading as a hedging strategy are used by big traders all across the market, big companies, where they actually hedge. But they do it in a very sophisticated manner and they have professionals. If you are trying to actually hedge your portfolio with derivative contracts, trust me, sometimes the cost can be more. You can make more damage than actually help your portfolio by minimizing losses. It requires a lot of learning over. Mistake number 2, which I've seen, is one strategy only. This is one of the biggest mistakes I've seen. What if you only enter into a long call option? Okay, so you're only looking at one side of a particular trade. What I see is that most of the sophisticated investors have multiple strategies. They have this bull call spread, bull put spread, bear call ladder, where they do multiple strategies to protect the upside, downside, limit their losses, so on and so forth. If you're going for a naked call strategy or a naked strategy traded in the market, beware. You might require to rejig your entire game and look at multiple strategies over here. Don't just simply go with one strategy only, go well informed. Okay, there are many experienced and sophisticated investors who actually speak about these particular examples. I'll not dive deep into them. But if you're actually understanding the option trading game or the future game, you should actually understand that you all should have multiple strategies revolving around. You can't simply go straight in the market saying, okay, I'm going in this one particular strategy. It's quite difficult. And the last mistake which I would like to touch upon is that selecting the wrong expiry or out of money contracts. Now, out of money kya hota hai? Many of the investors might not understand. For the ones who understand it, due to lack of information, you might actually pick this particular option, which is not actually, it does not even have the volatility to get the price you're actually interested in. We select the contract which is actually not even going to, reach your particular price. And I read this particular line where 80% of option contracts are worthless when they expire. Okay, so you enter a particular option contract, you're waiting for your particular, price to reach a particular point. It does not reach. And the person who short the contract takes your premium and runs away. Premium eating. Okay, 80% of option contracts are worthless when they expire. There are some of the smart investors who don't long a call or put option. They instead write a call or put option. They write that particular option. That means they sell. And they take your premium and run away. Because 80%, around 80%, I don't have a data point to back this particular number, but I've seen that around 80% of option contracts expire worthless. So selecting that right contract, you can't just go and say, you know what, I'm bullish on Nifty. Okay, you're bullish on Nifty. Which contract are you actually going to select? At 17,850, at 18,000, at 16,000, you have to actually understand those different expiry dates. Even with futures, we have Feb futures, we have March futures, we have April futures. Which one are you going to select? The one very close by, the one later. You have to understand that particular thing, understand the date game. Many of us don't have an event calendar when we trade in the F&O space. What is this event calendar? When I met some of the professional traders, they have this particular calendar which highlights most of the important events. Budget aane wala hai, Fed rate hike hai, ye particular news aane wala hai. There's a manufacturing data which is coming out. So they have that event calendar. And basis those event calendars, then they make the particular strategies. You have to have a particular event calendar, sir. You can't go straight in the market saying, okay, now I'm buying this particular contract. Where's your event calendar? So you have to understand the expiry dates, which events are just before the expiry dates, and how it can actually influence your F&O game. Okay, so before I open the floor for the question answer session, we have a particular offer where you can simply get your mutual fund transactions free. Mutual fund transactions will be launched very soon. Around next week, we'll be having a launch event. Plus 3 months free since you're a webinar attendee. And plus a massive 33% discount on this. And with that, Aiden, we can pick up some questions. I hope you all got some gist, understood the kind of the report by SEBI, and some of the common mistakes investors make. I'm not promising you I'll do many events on option trading strategies. I don't want most of the investors to push themselves into that. But you all can ask me any question that bothers you.
The first question is from Mr. Pradeep. Do you suggest hedging portfolio using the option trade?
Yeah. So hedging portfolio using the option trade, I just covered this a few points ago, but I'll spend some time on that. How many stocks in your portfolio are you going to hedge? What I mean by that is that let's say you have 10 stocks in your portfolio. You might know that not all stocks have a derivative, have a future, have an option. Some of the mega large caps and stocks which actually are very volatile or have a very good volume, they are only available in the F&O space. So what are you going to exactly hedge? So let's say you're going to hedge 3 or 4 shares and the rest 4 and 5 you'll not be able to hedge. Secondly, there's a cost which comes with hedging, sir. What I mean by that is you have to pay a particular premium also, it's not free. Hedging might go wrong, you might actually make more loss. So for retail investors, some of the investors are actually going same plain game into the market. It's very difficult to hedge each number of shares in your portfolio. Let's say you hedge using a Nifty option. Still, all your shares won't be part of the Nifty index. I have seen investors make more loss than actually more profit when it comes to hedging. They make more harm than good. And some of the big hedge funds who have actually been successful when it comes to hedging, they've done a good job accordingly. But you have to understand that it requires a lot of patience, a lot of screens around you. It's like a full-time activity. You can't simply hedge by placing one contract and leaving your portfolio. If things reverse, you might make loss on both sides. Okay, so hedging, yes, people use it as a strategy, but still you need to have a lot of experience, see how many stocks of your portfolio actually into that F&O space, and then think about hedging.
The next question is from Mr. Vishal B. What's your opinion on MIS trading? Is it safer than trading?
MIS trading, I not actually touched upon that. Okay, and margin intraday square off is something which I used to do personally back when I started off investing. It's the most riskiest thing. It's the most riskiest instrument or the particular trade I've actually seen in the market. Because here you have to complete that trade in that particular trading session. You buy a particular contract at margin or you sell a particular share at a margin. And before 3:30 you have to square it off. Anything might happen. You might be really bullish about that share, but that share goes up the next day or after 3-4 days. But you have to finish your particular trade in that same day. I think it's the most, I've lost a lot of money in that particular game and now I've stopped doing that. I feel it's the most worthless particular instrument to enter into. If you're bullish about a share, buy that share with the amount of money you have. Just don't enter this margin game and think of, मैं एक दिन में profit बनाऊंगा. एक दिन में कोई उतना पैसा बनाता नहीं. It takes a lot of years and a lot of patience or temperament when it comes to particular trading.
The next question is from Ms. Usha. Jason, not related to the options, but what is your opinion on ITC? It has come out with good results.
Okay, it's not related to options. Okay, let's just see ITC over here. So if you share my screen, I'm currently on the ITC share. So it's been a mojo stock since 10 months, 24 days. And just to make a disclaimer, I have this particular stock in my particular portfolio. I had invested I think after it became a mojo stock after a few weeks, and I had got it at a good price, and it's given good returns as well. Okay, so if I go to financial trend over here, let's look at the results. I got an email yesterday, it was very positive. Okay, things do look interesting about the company. The profit has grown, operating profit has grown, profit after tax has grown. Each quarter in the last 5 quarters, if you remember, I always give importance to consistent growth. It's hit a 5,000 mark now, but if you see each quarter is growing slowly. Okay, there are a lot of positive points, so it's a very positive result. Okay, one thing is that the non-operating income is highest at this particular quarter. Not extremely high, but it's a negative sign. It's positive, but a downtrend. We'll have to actually see how the market reacts to it on Monday, because I think the result came after the closing session on Friday. I think the score is 85. I'll still go with the particular score. It's still strong buy in our system. And yeah, it's a mojo stock. It has made a lot of wealth for investors. And the one funny thing is that this particular stock was compared to the 200 rupee price note. If I just take a minute, Aiden, and show you the price chart over here. Okay, and I'll go back to 3 years. If you see this particular chart over here, it was at that 200 level You know, a lot of memes that the Reserve Bank is planning to change this particular share and rename it as the 200 rupees note because it is always hovering at this particular range. Okay, I think here somewhere when we asked you all to particularly buy it, many investors said कि यार ये वापस 200 पे ही आएगा. But you can see the growth over here. So Mr. Sunil actually did a very good prediction over here, and I mean not a prediction but a very good choice over here, because when we entered it as a mojo stock was the time it went up. Otherwise for a long period it was just at 200 rupees. Okay. Yeah.
The next question is from Mr. Haresh Upal. Hi Jason, is option selling writing option a good strategy? What do you think?
Is option selling writing on option strategy a good strategy? See, here you have to kind of understand that when you write or particularly sell an option, your loss potential can be unlimited. With the guys who long a call and put option, your loss potential is limited to the premium you paid. If you're asking me if it's a good strategy, it's kind of risky as well, but you have to understand, you'll have to monitor your particular movement of that particular contract very carefully. I've seen a lot of videos, I've seen a lot of tutors who make a lot of money with option selling. They select a particular option, they sell it at that particular price and they eat the premium, and that's the profit they make. I see a lot of investors making a lot of money in that. But as I said, the loss potential is unlimited. So if you're really new into the game, you'll have to actually understand how it works, and you'll have to actually monitor your particular position over a long period. Okay, you can't simply go write a call option and sit back. You might actually have to, keep on depositing your margin, because the amount of loss you might make go unlimited. If you're new to the market, new to the F&O space, you would have to take a step back and actually think when it comes to this particular strategy.
Jason, few investors have written, what do you think, is algo trading leading to young age people earning more money? What do you think on that?
We just flash the question.
There are many investors written down, so I have not.
You just repeat it, I didn't pay attention.
Algo trading. Is
algo trading as a concept, yeah. And so I had actually gone through and checked how many percentage of trades actually happen when it comes to algo trading. I think it was around, let me just cross check it. I think it was around 3% of the trades which are currently happening actually happens with algo trading. Okay, let me just cross check it. Yeah. So 3.85% of trading happens in algo. I think in the US market it's slightly more developed. There is scope. Algo trading does have some scope. I think we'll have to give this some more time in the market to actually, understand how well algo trading is placed in the market. Okay, since it's algorithmic, you'll have to be very, the trades, the software and the systems which actually happen here will be really sophisticated in nature. I still feel there's a lot of time for our market to actually grip upon algo trading. Very exciting. I'm actually paying a lot of attention to the news and developments in this space. I don't have an opinion now as of such, but if anything new pops up, I'll surely come and speak about this in my webinar. I'm actually excited to actually know what's the developments now.
The next question is from Mr. Tarun. Hi Jason, let me know where do you get this report from?
Oh sure, if you can just share my screen again. Okay, so you can simply go to the SEBI website over here. So I'm going to, okay. So if you go to media and I think press releases, so your SEBI underlines the needs for analysis and disclosure of risk and trading in F&O. Please go back, read into it. See, you all might actually not agree with the inferences I made. Many investors over here might have different opinions as well. I like that criticism. Please go here, and if you share my screen, sorry. The study is available here. So after you open this particular report, it's not over here. This is just the main highlights. But if you click over here, the study is available, and here this is the actual report over here. So you can simply download it. There's a lot of data points. If I just spend a minute over here, where I got this data from, there's a lot of data points, and I think SEBI has done a good job in actually compiling across different demographics. I have not actually put in everything because it would have been a very big webinar. But if you go over here, see, I like this particular emoji over here as well. The potential of loss is slightly higher than the gain. I'm not scaring away investors. I'm not trying to demotivate you all from trading. But if you're an active trader in the market, it's really helpful if you understand this report. Okay, if you get an idea about what's actually happening in the market, if you're in a good position, because a lot of us might look at a trading account and says, yeah, मैंने 1000 रुपए का loss किया. That's fine because people have made an average loss of 1.1 lakh. So even if you're at negative, you can actually read this particular report so you get some idea of where you stand versus the entire market as well.
The next question is from Mr. Zulfi Kurashbar. Hi sir, I'm interested in future and option but I couldn't make profit. Please let me know how should I select the option stock to trade.
I need to know more about how you've been trading. If you've not been able to make profit, it might be one side that you're not actually understanding how options work. You'll have to spend some more time actually in understanding how it works. And if you think you're not making profit at all, there are many other option trading strategies which I wouldn't say guaranteed profit, but since you're doing double strategies, the amount of loss you're making would be limited. Okay, so I can't actually help you out. I'm not an extreme expert when it comes to future and options. I don't have many strategies myself. If you ask me anything about stocks, results, financials, fundamentals, I'm quite a step ahead of that. I'm not boasting, but I can actually go on the Markets Mojo website. We have a lot of research there where I can actually show us some strategies. In F&O, I believe I'm not extremely good with that, so I won't be able to actually make strategies for you. If you all are actually interested in that, we can get a guest speaker, or I can spend some more time researching, and we might actually open up this particular space. But looking at the amount of loss investors make, it's kind of risky. I don't have a particular option, stock to trade in, so I won't be able to give you a good answer for that.
The next question is from Mr. Rakesh. As a full-time trader, I partially disagree with some of the inferences made based on the data. Having said that, despite Markets Mojo traditional bias against trading, I must appreciate the mistakes a trader make has been well researched. While there may be more points, I agree with the points covered in this section. Overall, good research has been done for this webinar. Thanks for the efforts.
Thanks a lot, sir. And you might actually disagree with some of the inferences. Some of my teammates also were saying, yeah, Jason, you're making a very strong inference over here. Like 14% of people use smartphones. So they were like, why are you coming up to a very straight conclusion over here? So I will research more about it as well. And I'm happy if you have, as a full-time trader, if you're a full-time trader, please write in some of the criticism. Please tell me where I can actually improve on something. And I would be really happy on having a debate on that. And if you want me to actually touch upon some other points to all the investors over here, simply drop it in the chat box so we can actually read different other reports, across the different markets. Yeah.
The next question is from Mr. Vineet. What is the source of data for the younger group is performing better than experienced individual?
The source of data is straight from the report, sir. It's like if you go in the particular report, you will actually find a breakdown which happens from, let's say, less than 20, 20 to 30, 30 to 40. It was shocking for me as well when I looked at the report. So this is all straight from the report. I have not made any of this data. The one data point which is not from the report is the mode of trading, which I said 14% from smartphones, which I got from NSE. But if you look at all these data points are actually in the report. So it's not something from my own pocket. And yeah, the less than 20 age group was the one which had the highest profit potential and the second lowest loss potential over here. I really don't know what's the reason, because I can't deep dive into this. I don't have a very big research team to actually go and conduct a survey. But this was one of the points I found out in this report.
Jason, we are done with the Q&A.
Oh, thanks a lot. Nice questions. A really good experience for me as well. I mean, I've not actually, spent a lot of time in the F&O space. When I started off in the F&O space, I made some loss, so I put a step back. I went into fundamental investing. But it does not give you I'm not trying to give you a message that, completely stay away from futures and options. There might be really experienced individual traders joining us today. And, you can actually look into that particular space. All I wanted to do was to highlight some of the findings from this particular report and make you a bit more aware. I'm here to educate you. So if any of the investors, Markets Mojo has a really impression that you should stay away from trading. I do myself as well have this opinion that you should stay away from trading. But I'm not coming here to discourage you or encourage you into this space. This was more informative so that you're aware. My goal in the end is to make you more aware with the data points available in the market. And thanks a lot everyone for joining us today over here. Please drop in any queries you have in the chat box as to how we can improve this particular session. On Monday, we have our latest addition to Top Stocks. Chief Investment Officer Mr. Sunil Damania would be giving you an idea of what are the latest stocks that have entered. Okay, we also have a Stock of the Month webinar coming up for all our paid Mojo professional members. The webinar schedule will be shortly up on the website. Looking forward to seeing you all come for the events. Goodbye and have a great weekend. Thank you so much.